Well, howdy there, folks, and welcome into today's video. They are selling stocks as quickly as possible now at this point in time. Got a lot of very important things to show you in this video, a lot of important stocks to talk about, some insane moves out there, and I want to talk about a very important subject. There's something just happened that I have to show you guys that I think is kind of going on the DL, and I also want to share what I think is going to happen in 2023. Wall Street is going to force a situation that is going to be quite insane, to say the least. And you might think they might not be able to pull this off, but I think they're going to be able to pull it off, and it's going to be ridiculous. Okay, so hope you guys enjoyed today's video. As always, I appreciate everybody that subscribed to the channel, and let's get straight into this. So now at this point in time, they're selling stocks pretty much as quickly as they possibly can without causing full-scale panic in the market. We're only halfway through the month of December, and so this is just December so far. This is the worst December we've seen since 2018, and back before that, you'd have to go back to like the great financial crisis type time to see a December this bad. And the Dow Jones Industrial Average is down almost 5% so far this month. The S&P 500 is down 5.5% this month. The Russell's down 6.5% so far this month, and the Nasdaq's down 6.5% this month. Now, keep in mind, it's for the stock market in general. You expect the S&P 500 at least to go up 8% per year. Okay, so when you're talking about 5.5% down in a half a month, that's ridiculous. Okay, it's hard to even explain that, and I understand we're in a very funky time right now where you're seeing these insane moves in the indexes. But I can tell you, this is a furthest thing from normal. This is like a once in every 10, 15 year type thing to happen to the market. When you're going through a couple week span and you see the Nasdaq down 6.5%, and it's like, who's to say this market's coming back at all this month? I mean, we could end up finishing the month down 10% plus or something like that, which is absolutely insane. And think about this for a moment. This is very important for everybody watching us. Think about this, okay? This is the month that's supposed to be the Santa Claus rally that everybody figures, oh, if this is a 1 month, we're safe. December. That's the 1 month the market goes up. And here we are, just the market pushes down, right? Now, I saw somebody, they're like, oh, what about the epic rally? You said there was an epic rally coming. I don't know if you missed it. The epic rally came and it went. On October 13th, I put out this video talking about why the stock market was set up for an epic rally. And I was 100% on with that prediction, essentially. It came and it went, and the market went absolutely insane. This is from October 13th through November. And that next month, the market just absolutely skyrocketed. The Nasdaq was up huge, Russell was up huge, S&P 500 up huge, Dow was up huge. It came and it went. At the end of the day, what I looked at, there was a bunch of various things that I went into that video about why we were going to have a short-term big rally there. But one of the factors I factored in was everybody was talking about on Wall Street. I watch CNBC all the time and hear all these Wall Streeters go on, right? I always have it on in the background, just kind of listen and hear what they're talking about. All of them were talking about, oh, we're going to have a big end-of-year rally, meaning essentially from the end of November through December, we're going to have this big rally. And so my mind was like, okay, if they believe that, guess what everybody's going to start doing? They're going to start positioning way before you get to the end of November. And sure enough, that's exactly what happened. And so what we saw was the market absolutely take off from basically the day I posted that video, October 13th, until most of November, the market was just up huge. And then all of a sudden the time period came that they thought we were supposed to have this epic rally that they kept talking about on mainstream, financial media all the time, and it never came. And now we're just going down and down and down and down and down, right? Because everybody already positioned into it. And so by the time that situation happens, it doesn't play out that way. And the market just ends up going the opposite way everybody kind of figured out. And it's no different than if everybody on Wall Street believes that the market's going to go down in a certain month. Let's say everybody's of the belief, hey, market's going to tank in the second quarter. Let's say that's what everybody was saying, right? Well, then everybody would sell out in the first quarter. And so likely by the time you get to the second quarter, the market's probably not moving down anymore. And by that time, it's probably moving up, which is opposite of what everybody's talking about because everybody's going to position ahead of time. And the name of the stock market, especially if it's from a short-term perspective, it's about being first. You've got to be first in the trades. If you're not first, you're last, as Ricky Bobby would say, okay? It's just not going to work out well for you, right? So that epic rally, it came and it went, right? Tesla has lost. I had to, type out the number for you guys so you can see how large the number is. Has lost over $700 billion of market cap this year in 2022. The stock is showing no signs of recovery. And even though the news came out about Elon Musk selling, a lot of people assuming maybe he's done selling, blah, 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 it doesn't matter. The stock just goes down day after day after day after day, down another almost 5% today, down to $150. Stock down 62.4% so far. Now, something very important and this is very important because everybody's looking at this, and I understand it's doom and gloom, and Tesla's lost so much value, and they might miss numbers in 23, and all these things, right? I understand that. But here's something very important for everybody watching this video to understand. Let me show you this, okay? This is Tesla's revenue over the past 10 plus years, okay? This company went from $100 million or so of revenue to 80 billion plus they're going to do in 2022. 80 billion plus dollars, right? And so when you see something like this, it allows you to zoom out. And I did a whole in-depth kind of piece inside the private stock group here today in Breadcrumbs of talking about, how it's important to zoom out sometimes. And you get so caught up in the short-term stuff, whether it be your own financial situation or whether it be, whatever's going on with the stock. And sometimes you just got to zoom out. And you got to look at where this company's been, where it's going long term, and get out of just the short term mindset, because I understand, and we all understand, and I'm talking about this more than probably anybody in terms of, I think Tesla's going to have quite a struggle to hit numbers that analysts expect in 2023. But with that being said, we can't forget all the progress Tesla's made and all the progress Tesla will make over the next decade. We get so caught up in these short-term numbers and these metrics and stock price movements and things like that. Sometimes you just got to zoom out. Same exact thing with a stock like AMD, right? AMD's been hammered. Stock's down 56+% this year. It's been awful for AMD. It's lost, over half its market cap this year. It's been incredible, right? But you look at the progress AMD's made over the last number of years, from less than $4 billion of revenue, right, and taking massive losses in 2015, to this year they should do over $23 billion in revenue with massive profits. And so you sometimes just zoom out and look at where these companies have been, think about where they're going over the coming years, not just over the next 6 to 12 months, and you begin to you have a little bit of a mindset shift, and you realize, oh man, I'm getting way too caught up in the short-term things that ultimately in the long term will not matter. Are things set up for the long term or not? That's what you always got to ask yourself, right? Now, in terms of Apple, talk to me when it's down 50% plus. This stock still is not even remotely interesting to me. It's down 26%. The valuation metrics on the stock are still very, very rich. There's a lot of questions about the App Store business and, moves that could potentially happen in Europe to limit their business model there. And it's just, there's a lot going for Apple, in my opinion, in the negative manner for the next at least 1 to 2 years. And I think iPhone sales are going to drop, Mac sales are going to drop, iPad sales are going to drop. I think all those products are going to drop. And in terms of sales numbers, that's just what I see. We'll see if it plays out, but that's what I see coming for Apple. And so therefore, I think the stock has still a long way to fall. This stock's got to be down at least 50% plus from where it started this year for me to even be remotely interested in this one. It's still not there. And I could see myself buying Apple at some point in time. I've owned the stock in the past. It's just not right now. There's too many other good deals out there with way more growth moving forward than a stock like Apple. It's a great company. We all know that. It's the reason it's the biggest market cap, but it's got a long way to go in that whole game, right? A stock like Amazon, look at this. I don't know if people are aware of how bad this stock has really been. Since the summer of 2018, this stock is down, which is hard to even wrap your head around. When you think about all the growth that Amazon's had in their retail business, their e-commerce business, their cloud business with AWS, the growth in revenues and profitability and all these different metrics, right? And to see that stock down is sometimes hard for folks to even wrap their heads around, because this company's in obviously a much better place than it was in summer of 2018, right? But at the end of the day, valuation, it ends up mattering over the long term, right? And I did a video 4 years ago, back around the summer of 2018. And I was talking about basically Amazon, Netflix stocks are heavily overvalued. And I talked about it's very dangerous to short those stocks, which it is, but they're very, very overvalued. And so they could, underperform for some time, right? And Amazon and Netflix in the short term, those stocks even went to higher valuations, right? But at the end of the day, if we look back at that video, and I went through their market caps and what their expected profits were and their PE ratios and all these different metrics, right, 4 years ago, back in the summer of 2018. If we were to think about that, Amazon's right about the same market cap today, all these years later, that it was back then, right? A stock like Netflix market cap is far less today than it was back when I did that video 4 years ago, over 4 years ago, right? And, Netflix today is at $129 billion market cap. When I did that video, it was at $180 billion market cap, right? So it's lost about $50 billion of market cap over the past 4+ years. So those companies are just in a very, very different place. And the thing that's interesting, and I got to say this, and I think this is important, right, is those stocks, both of them, are now a deal for long-term investors, which is a complete 180 from where I felt these stocks were valued 4+ years ago. 4+ years ago, I felt like both those stocks were extremely overvalued and they could have underperformance, right? And as of today, I can stand here and I can say Netflix and Amazon are great buys for long-term investors. You've got to be prepared to buy those stocks over the next 6-12 months because it's very possible they could go lower and probably will go lower over the next 6-12 months. But at the end of the day, for a long-term investor, those are great buys now. The same could not be said when I did that video about those stocks 4+ years ago, okay? So that's important for everybody watching this just to understand, like, over time, as business models grow, valuations come down, stocks get much more compelling. Netflix and Amazon are much more compelling. Now, in regards to Amazon, something very important that I don't think a lot of people are thinking about that could hurt Amazon in a pretty significant way is Whole Foods. So they bought Whole Foods years ago, right? And, Whole Foods back in 2017 did roughly $16 billion of revenue, which is a pretty big number, right? And so who knows what they're doing today? Maybe it's 20 billion or 25 billion or I don't know. Who knows where that number is today, right? But do keep in mind, Whole Foods is it's always known as the most expensive food store, right? So if we're going to have problems in the economy in 2023, right, which we are going to have problems, let's just admit it, right? Whole Foods' business model will suffer. And it is very possible that Whole Foods becomes a drag on Amazon's business. It is very possible that revenues were to go down. It's very possible that profitability were to go down for Whole Foods. And that does hurt Amazon. Amazon has a lot of different factors kind of working against it in the short term. And that's just one of those factors. And so I think that's important for everybody to look at and remember, because that's not a small business. That's a pretty large business for Amazon, right? Obviously, if you compare it to the e-commerce business and the AWS business, it's a much smaller business. But at the end of the day, if you're talking about maybe this business is doing $20+ billion of revenue, and they were to go down and their profitability was to go down massively because of the economy. If you watch Whole Foods back in the great financial crisis, their business got hit in a major way. And at the end of the day, that's just the way it is. People, if they're not in a good financial position, they'll go other routes, right? Salesforce. So this is a stock that is now also lower because there's other famous stocks in the market right now that are lower than they were in the summer of 2018. Salesforce is one of those companies. It's down 18.5% from where it was in the summer of 2018. Never mind this year, right? Now, Salesforce, I'd put exactly into the group of Amazon, Netflix. It's now a great long-term buy. Do expect to get Salesforce shares for cheaper over the next 6+ months. But if you're a long-term investor, Salesforce is a great buy over this next 6 to 12 month span. It just is. And it's such a different market we're in right now versus where we were at, a few years ago. Let's put it that way. PayPal, this stock is down from where it was in the summer of 2018. The stock's down 23% from where it was in the summer of 2018, right? And PayPal is another one of those stocks that is now a great stock for long-term investors to be adding shares of over this next 6 to 12 month span. And it's incredible how many deals this market has had emerge out there now and will for the next 6 to 12 months. It's absolutely incredible, okay? Now, this is downright scary, okay? Things are getting more serious in regards to this whole Blackstone situation. Blackstone Real Estate Fund for Wealthy prompts SEC is basically looking into the whole situation. That's the best way to put it, okay? They're looking into that whole situation now. And this is one of those things that it feels like the early innings of potentially some of these maybe funds or just different entities, Wall Street entities, that could start to face some major issues in 2023. And we've watched what's happened with crypto, obviously, in 2022. This was a year that wrecked everything more speculative, right? But the thing that hasn't really been touched is anything kind of like Wall Street related. But I can tell you, we've had such a good economic period for such a long time, and we've had big risk taking for quite a while, that I would not be surprised if we see some things happen on Wall Street in 2023 that we never saw coming, and we see some situations that just are mind-blowing to us, like, wow, can you believe this something went under? Can you believe this is all of a sudden limiting their withdrawals? Like, I have a feeling we're going to see some of that play out in 2023, and you just don't know where it's going to come from. I just have a feeling it's coming from somewhere on Wall Street. We watched this play out in the great financial crisis, and when you've had the Fed always being there to help the day, believe me, there's going to be a lot of things that are going on behind the scenes that are going to be highly risky, because the Fed's always there to backstop things, but this time the Fed's not there. This time the Fed's not there to bail things out until they'll be forced to, which we'll talk about in just a moment, because they will be forced to do something. But they're not there right now, and they won't be anytime soon. And so don't be surprised if you have some very very scary things come about over this next 6 to 12 months that are Wall Street related, okay? And it's going to move from, oh, it's just the crypto stuff and just that super speculative stuff to, oh, no, it's more of this mainstream stuff. It's these high net worth individual stuff that some folks are getting into and things like that, right? Now, I'm still planning on getting back out there in terms of an active buyer in the first quarter of 2023, right? I'm hedged up now at this point in time, so I'm hedged. So if the market tanks in a significant way, I'll have some call options that just call it do very, very well. And so then I would take that money and basically funnel that money into long positions if the market was to tank and the global economy was to just absolutely tank, which is certainly a realistic possibility. And I think that's what Wall Street's starting to slowly figure out here is, oh boy, it's very possible this economy is about to go off the cliff. And it's very possible that these company earnings are going to fall off the cliff, unemployment's going to rise massively, and the whole economy is going to go boom, okay? And so I'm hedged up now just in case things get really ugly. I'll make it out to the other side and be in a pretty good position, right? Now, with that being said, I am expecting, and what I think is going to happen, okay? Wall Street can force anybody to do almost anything, okay? And so what I could see as a potential realistic situation, I want to be the first to call this out, okay, is I think the Fed could potentially, I think Wall Street could potentially force the Fed to start cutting rates in the summertime. And how they would be able to do this, essentially, how they'd be able to execute this, is as long as inflation continues to come down over the next, let's call it 5 or 6 months, right? And gets into, let's say, the 4s, somewhere in there, maybe 3s, but 4s, right? So maybe it's not down there 2% inflation target. But Wall Street could easily tank the whole market, right? Let's say, and you could have good reason to tank the whole market. Let's say earnings are starting to fall apart for companies. Let's say unemployment is starting to go up in a significant way. I don't know if you guys just saw Goldman Sachs is talking about dropping 8% of their workforce. Well, it's rumored, so we'll see that in January. It's just like people are trying not to let people go right now because it's holiday season and they don't want those headlines to hit that everybody got laid off right before Christmas. It's just a bad look, right? So let's just wait till January and then we'll lay off people, okay? So if you have company earnings tanking, unemployment's climbing high, overall economic activity starting to go negative, you have good reason to start tanking the market from the Wall Street side, okay? And they would be incentivized to do this. I think Wall Street's probably positioned pretty well now because they've had quite a bit of time to play out to position into some puts, position into a lot of short positions and things like that, right? And just be cash in general. And so they could really dump this market through the first 3 to 6 months, if they want to, of 2023 and send a very stern message to the Fed that you guys better cut rates because people will start to panic once the Dow and the S&P start to fall in a major way. The NASDAQ's fallen over 30% in the past year. No one cares about the NASDAQ except people that are super into the market. You want to cause real panic? Tank the Dow and tank the S&P 500. And next thing you know, everybody in the world is going to be talking about it. Oh my gosh, the stock market's crashing. Right now, the only people that talk about the stock market, people like me, people like you, people that are super into this stuff. Once the Dow and the S&P tank in a significant way, I'm talking that like 30, 40% drop, that's when everybody picks up on it. That's when you see it on every news channel they're talking about it. That's when you see every politician starting to talk about it. And then the pressure on the Fed to, you need to reverse course. Look at inflation's come down so much, we're almost to your target. You better change quick. So that the Fed would be forced into a pivot at that point in time. And Wall Street gets whatever Wall Street wants to get. They'll force Elon Musk to start being more of a good boy. They'll force him into doing that. Trust me on that. They forced Zuckerberg to cut all those Meta employees. They're going to force a lot more companies to cut a lot of employees. Wall Street always gets what Wall Street wants in the end. And they're going to want the Fed to pivot by, around summer of 2023. And they will tank the baby to make them essentially pivot. And the Fed can always act like, oh, we don't pay attention to what's going on out there. When you start to get that sort of pressure, that's a different level of pressure. There's no pressure on the Fed really in 2022 because inflation's been so high and the Dow and the S&P have held up halfway decent. The S&P's maybe down 19% roughly. The Dow's down maybe 10%, 11%. It's not enough to cause a real panic. You have that VIX shoot up 30, 40, 50. You have the Dow all of a sudden hit down 30, 40%, S&P down 30, 40%. That's when the panic sets in and that's when everybody starts freaking out about we're in a complete collapse of the economy, complete collapse of the stock market. That's when the administration The presidential administration has to step in, government officials have to start stepping in, and everybody starts to just panic, and everybody starts looking at the Fed, and they're like, what are you guys doing? You're keeping rates, so you're killing the economy, and the 100% of the blame will go on the Fed. Everybody's going to look at the Fed and be like, it's the Fed's fault. The politicians are all going to turn on the Fed, and all of a sudden, next thing you know, there's going to be this overwhelming pressure, and all of a sudden the Fed will have to cut. But we're still a ways away from that. So we've got quite a way to tank this baby until that forced pivot ends up coming. But Wall Street always gets what Wall Street wants in the end, and they'll be able to get whatever they want, guys. So hope you enjoyed today's video. As always, if you're looking for any goodies, check out the description area. I got a 50-minute reaction to the Honest Morgan Stanley latest conference. Did that a few days ago, so if you want free access to that, I can email it over, text it over. Check that out down there. Also, if you're looking to join the private Discord chat, my private stock group, any of the different chats, things like that, that'll be linked down there. My Instagram's linked down there. As free as my free stock picking checklist is also down there. So if you want access to any of that, that'll be in the description area. Much love as always. Appreciate you, and have a great day.